moving on then, IRFC is in focus after the stock surged 20% in trade yesterday with volumes 4 times of its 20-day moving average. Now, what's the story with this stock and what's leading to this rally? Somit joins in with all the details. Somit, take it away.
Well, if you see, IRFC stock has been in focus, but why are we doing this link today? Because if you see the shareholding pattern of IRFC, the promoter owns around 83.4% stake in the company, while the public shareholding stands at close to 13.6%. Now, of the public shareholding, mutual funds own around 0.8%, FPIs own around 1.1%, and nearly 10% of the stake is owned by retail and HNI investors. Now, yesterday, if you see the volumes on IRFC counter, both the total traded volumes on BSE and NSE stood at close to 54 crore. That is nearly 30% of the public shareholding and nearly 4% of the total equity. And volumes yesterday were nearly 4 times its 20-day average. The stock gained around 20%, locked in an upper circuit, and this was the biggest move for IRFC that we have seen since its listing back in January 29, 2021. On a year-to-date basis, the stock is up around 103%, and since listing, if you see, the stock has moved about 10% only 4 times, and all of these moves have happened in the last 1 month. The market capitalization of IRFC now stands at close to 87,000 crore rupees, making it the third largest NBFC in India by market capitalization, and it is even bigger than Shriram Finance, M&M Finance, L&T Finance and Poonawalla Fincorp. So what is leading to this rally? Firstly, if you see what does IRFC does, it does market borrowing arm of Ministry of Railways. It financed nearly 40% of the cumulative capital outlay of Indian Railways between FY17 to FY21. Now, it's a low risk business model of IRFC. It has no interest, credit or asset liability mismatch risk. It follows a simple cost plus model where the risk is largely passed on to Ministry of Railways, and it earns a fixed spread over the loans that it provides to Ministry of Railways. All interest and currency risk is passed to Ministry of Railways, and nearly 98% of the lending is done to the railways, so there is a little credit risk, but there is still a risk that are there to this rally that we have seen in IRFC. Firstly, if you see in FY23, the company's disbursements were down nearly 46% on a YY basis, and management so far has not indicated or has got any indication from Ministry of Railways for FY24 disbursements. Now, management is expecting some clarity to emerge in the second half of FY24. Now, for FY24, if you see, the budget had provided for a capital outlay of around 2.4 lakh crore rupees for the railways, and this was supposed to be financed by budgetary support with no funding requirement coming in from IRFC. Now, IRFC is also evaluating other projects, but the size of these other projects would be very small, which could lead to again a drop in disbursements for IRFC in FY14, FY24 also. Also, if you see the capex financing that IRFC has been on a declining trend. In FY21, it financed nearly 46% of the capital expenditure requirement of railways, which came down to around 19% in FY23. And the biggest risk for IRFC is the fact that government needs to dilute their stake. Now, government holding stands at around 83.4%, which needs to come down to around 75% by the end of January 2024. And also, if you see the valuations of IRFC, they have doubled over the historical averages. Current price to book, the last 12-month price to book stands at close to 1.9 times, as against 0.8 times that we had seen. That's the historical average for IRFC in the last couple of years.
All right. Thank you so much for all those details, Somit.